What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, we're going to talk about how to reduce FOMO and to stop blowing up funded evaluation accounts. So a lot of times you're blowing up funded evaluation accounts because you're trying to move too fast in a manner that you are not ready for. And typically this comes from trading position size that is much too large for your experience and or your account size. So it's always nice. It's always a good thing when we're trading 1, 2, 3 mini contracts and you put on those quick scalps and you're making $300, $400, $500, $600, but it doesn't feel as good when you go down $500, $1,000, $2,000, and then you end up blowing up accounts. Again, what I want to do and I want to emphasize to everyone is to size down. This is going to hold yourself more accountable. It's going to allow you to be in trades a lot longer, and it's going to allow you to see the bigger overall, cleaner and clearer picture. So what I would recommend to do is start between 2 and 3 micro contracts. Ticker symbol for the NASDAQ 100 is going to be M as in Michael, NQ. Okay, so MNQ. Again, what you also need to focus on is where is price action? Where is it trending? Are we over the 20 period moving average, which is a 20 SMA, or are we below the 20 SMA? So I want you guys to notice one thing here. Off the open, the market immediately spikes, okay? It immediately spikes. Let me pull up my drawing tool here. It immediately spikes over the pre-market highs and immediately pulls back down. Now, there's a lot of traders who tend to take this opening range and then don't sell for profits, and it pulls back on them. And as soon as it starts to pull back on you, that's when your fight or flight mode comes into effect and you start to get overly anxious and you start to panic and you start to do things that you should not do. One thing that I want to tell you guys and one thing I want to emphasize to you guys is if price action is trading above the 20 SMA, okay, you can disregard the color candlesticks that are in the opposite direction. So for example, this candle started green and ended red. Disregard the red, it's still green. These two candles pulled back red. Disregard, it's still green. 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 And technically, we did not close below the 20 SMA until here. You can see when this candle breaks down and closes below the 20 SMA, maybe that might be a short-term change in trend. However, as of now, it is proven not to be, just an overextended pullback below the 20 SMA. However, if you were in the trade anywhere, here, 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 it doesn't matter, you would have been making money. So one thing that I want to point out to you guys is you don't always have to have the most picture perfect entry, but you do need to be on the right side of the trend. How many times have you found yourself playing pullbacks, and then getting stopped out? Thinking that the market is pulling back and then get stopped out. Looking for that change in trend and getting stopped out. It happens a lot. Again, I've been there. I'm human. I'm just like you. I'm a trader. I've been doing this for 10 years. The market is not perfect. Price action is not perfect. We don't always get trending days and we don't always get moves that work in our favor. However, we need to understand where the price action could potentially be going and what it could potentially be doing. So one way that you're going to reduce the FOMO, the emotions, is by sizing down, okay? Because think about it like this. If one micro contract is going to move up or down $2, okay, $2. If the market was to pull back on you 20 points, you're only down $40 on one contract, okay? If the market was to pull back on you 10 points, 12 points, 13 points, and you're trading one mini contract, you're potentially down close to $200. So for a lot of traders that want to make those big flashy gains very, very quickly, and they want to trade like a rock star where you're clicking buttons, orders filled, order submitted, and you want to be trading each and every single move and every single tick, you're going to be down potentially hundreds and hundreds of dollars. It's just not sustainable for a long time until you've really perfected a really good strategy and risk management system. And a lot of times people are trying to work on the strategy or following price action, but they haven't really worked on the overall system as far as What are your risk management rules? What's your personal daily loss limit? How much are you looking to make before you stop out on the day if you do take trades and you get there? A lot of times that answer is open-ended, meaning a trader does not have the answers before they start the trading day. For example, myself, if I go down $300 or $400 on my prop firm evaluation accounts and or funded accounts, typically I'm going to stop trading for the day. If I go up $200, $300, $400, then I potentially start thinking about limiting my size and limiting the amount of trades that I take. And I only work on a trade by trade basis after that, meaning my size decreases. And as long as I keep winning, I will keep taking new potential trade setups. But as soon as I lose a trade, let's say I go from $400 or $500 in the green to down, $100, $200 on a particular trade, and now I'm only up $200, $250, I call it a day. I don't give away those profits. I don't give away those gains to try to make more money and get back to my original number, if that makes sense. So the way that you reduce that FOMO and the way that you stop losing these evaluation accounts and losing your funded accounts is stop trying to race to get to the finish line. Now, this is easier said than done. And everyone out there, including yourself, including myself, because I've done it to myself in the past, we all know that. But what is it going to take before we actually start listening to what we already know? It's going to take a lot of discipline. It's going to take a lot of patience. A lot of times, traders lack patience. They pull up to the trading chart, they pull up to their PCs, they pull up to their phone, and they think just because the market is open, I should be taking a trade. Okay? Realistically, you can't just buy wherever you want to. You can't just throw on trades for the sake of throwing trades. You need to follow some type of system, some type of edge, some type of pattern, some type of price action indicator for you, letting you know it's time for you to take a trade. For me, I have a very few and a couple different entry strategies that I like to use on a day in and day out basis that I trade with the team at Evolution Traders. And again, there's a million different strategies out there that we could all use. There's a million different risk management, risk to rewards, different techniques that we can, put forth. But it's up to you, the trader, to make sure that you're sticking to that game plan. Also, one way to reduce those emotions is when you get into a trade, a lot of times, 60-70% of the time that you do get into a trade, at some point in time, you go into drawdown. Okay. Now, it happens. You have to be a man enough or a woman enough to stomach those pullbacks, to stomach that drawdown. And again, a lot of traders cannot stomach the drawdown because they're sized too heavily, meaning that when they go down $300, $400, $500, $600, it's already detrimental to their account and their trading psychology, to where it causes them to make an emotional reaction, click the sell button, go the opposite direction, and then get smoked going the opposite direction. So again, if you were down $1,000 trading multiple mini contracts, or down $150, $200 trading a few micro contracts, the emotions are going to be very, very different. Okay. So one thing that I want you guys to practice on this week, today is only Tuesday. We've got, 3 days left before the week is over. I want you guys to size down. I want you guys to trade 1 or 2 micro contracts and forget about the outcome of how much money you're going to make. But I want you to focus on trading small size to control the emotions first. So over your next 10 to 15 to 20 trades, trade 1 or 2 micro contracts, allow your setup to take place, put on that trade, take profits where your strategy and system is telling you to, whether that's, 1 bar range, whether that's an average true range, 5-minute time frame, whether that's a particular, previous day high, previous day low level, whether it's a moving average level where you're looking to take profits into those supply and demand zones. Whatever the case may be, let it play out until you take profit or until you get stopped out. Again, never move your stop loss, never average down into losing positions, and let this run. Let it play out for 10, 15, 20 trades, disregarding the total amount of money you're going to make, and you're going to see how the emotions start to get a lot easier. The game starts to slow down a lot. It's because we're worried about making that $3,000 to pass our prop firm evaluation, which gets us all loosey-goosey and causes us to do stupid things. It's because Our billing cycle on our evaluation is going to be getting charged in 2 days, and we're still $1,000 shy of passing. So we put on this big size in hopes of, passing or blowing it. When in all reality, all you have to do is invest another $30, $40, $50 and get it going for another month so you can pass it the right way. Again, there's no rush in this business. Just because you're a day trader and a scalper and you can make money exceptionally fast does not mean that we need to make $1 million tomorrow. We want to be in this game for the long haul, the next quarter, the next year, the next decade, right? This is a skill set. This is an opportunity. This is a career choice. This is a side income where you can do for the rest of your lives as long as you do it the right way. I hope you guys found this video interesting. If you did, make sure to like, comment, subscribe, and I'll see all of you guys on the next video.